What's up, money lovers? Welcome back. Today I want to give a quick little update on SOFI stock and talk about two major catalysts that I see that could really propel this stock higher. So if you don't know, SOFI is a fintech company. They offer thousands of financial products that are both business to consumer as well as business to business. So SOFI is all about convenience, and what really sets them apart from competitors is that they're trying to make this all-in-one place where you can do your banking, insurance, mortgage, borrowing, lending, stocks, just everything all in one. Whereas currently you probably have many different accounts where you do your banking with your savings accounts, different accounts for stock trading and brokerages. So they're trying to make this convenient future where you would just do it all under this one umbrella. Makes life a lot easier, all about conveniency, and they're really targeting, younger future generations that I think this will be very appealing to. They also do a lot of student loans. So the hope with SOFI is provide this conveniency, get people into their ecosystem with maybe one product, but then it will snowball and all of a sudden they're using multiple SOFI products, which will, highly increase their profit margins, reduce their acquisition costs for new customers, and provide them with a competitive advantage, having higher switching costs. Once you're in their ecosystem, it's very difficult to transfer everything to another platform. So the business basically operates under these three different segments. They have their lending segment, deals with everything borrowing and lending related, from student loans to home loans, and this lending segment generates the majority of their revenues. Then they have the financial services segment, as well as the Galileo platform. So as I mentioned earlier, they offer a wide range of products. An example of the ideal scenario for SOFI would be bringing someone into their ecosystem, new customer, through their student loan refinancing. And then they can upsell them or cross-sell all these other products, get them into home loans, and this would increase their profit margins greatly, as well as make it difficult for them to switch. So they probably become a lifelong customer. Once they do have multiple products with SOFI, they're probably going to be a customer of theirs for the long haul. So let's get to those two major catalysts, and then we're going to look at their last quarter report and see how this business has been doing, if they're moving in line with their guidance and projections. So the first major catalyst was that they just received approval to become a national bank. So this was big news for the company. It's something that they've been talking about for a long time, and it caused the stock to shoot up quite a bit. It's come down a little bit since then, but they acquired this Golden Pacific Bank Corp, and it's going to provide many benefits, mainly that it will increase their profit margins. With a national bank charter, the CEO, Anthony Noto, said not only will we be able to lend at even more competitive interest rates and provide our members with high-yielding interest on checking and savings, we'll also enhance our financial products and services to ensure they efficiently meet the needs of our members, business partners, and communities across the country while continuing to uphold a high bar of regulatory standards and compliance. And as you can see here, their illustrative impact of a bank charter, this is only going to help the business become more profitable. Some of the key benefits: durability, lower cost of capital, increased NIM from holding loans longer, and enables increased growth in lending. So as you can see, their projections prior to the bank charter versus with the bank charter, it will add significant income to their bottom line. So that's the first major catalyst, and that's going to help the business for years and years to come, generate more profits. Second major catalyst I see is that the SoFi Stadium that they bought the naming rights for is going to host the Super Bowl this year, among many other events, but that being the key one. And I think that this could be huge for SoFi in the short to medium term, as it just gets more people thinking about SoFi and generating more interest. And if we just look here at the Google Trends for SoFi over time, you can see that it's already starting to pick up. In the past couple weeks, the interest is already starting to rise, and I would just imagine that that continues through and past the Super Bowl, when a lot of people start to wonder what exactly is SoFi. So I think this will help them attract new customers as well as new investors. The NFC Championship game will also be played there this coming weekend, Rams versus 49ers. So this can do nothing but help SoFi, the company, I believe, in the short term. Now, some other arguments for SoFi stock, and then we'll get to their most recent earnings report. So this is a document that Chamath Palihapitiya had posted to Twitter when IPOE merged with SoFi, taking them public, just outlining some of the strengths of the company and some of the projections, which we'll see if they're meeting those projections. So if we just look at some of their 2021 expectations, for 2021, they're expecting $980 million in adjusted net revenue. And if we add up the first 3 quarters of 2021, they have generated $730 million in net revenue. So they are on track to meet or exceed that expectation. So good to see the company meeting their guidance, and it may possibly even exceed it. We'll have to wait to see their Q4 results, but they are on pace to meet that. So that's a good sign. This company is growing very quickly. Their members has also grown very quickly. I believe that they projected 2.8 million members for 2021, so they've already exceeded that through 3 quarters. They're up to 2.9 million members. So this company is not yet profitable. They haven't posted a profitable year yet, but their revenues are greatly increasing. They're growing very fast. And if you think that they can continue to grow at this pace, or you believe in this company long term, then this could be a great buying opportunity. As the stock is almost at an all-time low here, as you can see, around when it went public, it was around $10, and we are getting pretty close to that number. It's just been going down quite a bit after it reached a high. 52-week high was $28. Right now it's around $12.66. So again, if you believe in this company long term, you think they can continue to grow, then you're getting in at a steal of a price. It is a speculative play as they aren't profitable yet, and it's going to take a few years to play out. So the bank charter should help them get to profitability sooner and continue to grow. They'll definitely be making more money as a result of that bank charter. It's going to help them out a lot. Super Bowl should bring some attention to the company, as we said. So I think those are 2 major catalysts that should help propel this stock moving forward here. And let me know what you think in the comments below. Do you own SoFi? Why or why not? If you enjoyed the video, don't forget to like, subscribe, drop me a comment if you have any questions. This is Vinny from the Investment Club, and I'll see you next time. Thanks for watching.